Howdy, Jacob here. Today we're looking at American Tower Corporation. Two notes about this company before going into it. So this was one of the first couple stocks I bought, probably top five, along with Qualcomm, Ericsson when it was investing into 5G. I was like, oh my gosh, American Tower's got to be it. Um, so yeah, I'm one of the first five stocks I ever invested. Cool. And the second thing is very well known Hunter Bagger American Tower, where um, they're really one of two uh, communication real estate. I mean, the only ones I know are American Tower and Crown Castle. And basically, if I'm a Verizon, AT&T, I basically go through them to get the communications that I need done. And so they really have kind of a biopoly in this business, and American Tower is one of the definitely largest global rights. And when it comes to communication right, it definitely is the biggest. And if we get to some of the numbers here, they do have quite a bit of debt. So 90 billion market cap on 123 billion debt, or enterprise value. Sorry, so net debt of about 34 million. And growth has been amazing. I mean, this is low double digit growth for a company that, I mean, again, you got a biopoly. So, I mean, you can charge whatever you want. You own it. Who are they going to go to? The other person. They're probably doing the same. So, I mean, it's a very impressive company with a very impressive portfolio. Surprised that their gross margins are actually down a little bit and their operating margins are also down a little bit. So that does surprise me. Dividends are up a lot, so much so that their dividends are greater than their earnings per share the last 2 years. I don't like that. Uh, Return on invested capital very low. So, I mean, I guess it's fine then. But if the company gets to a very cheap enough price, I want this company to get rid of that dividend and just buy back as many shares as possible. It's going to be the best way to give money back to the shareholders. But it sounds like, other than the acquisitions, they don't really have many reinvestment opportunities. I mean, they own and they can, redo parts of their plants that they own, which you can see from capital expenditures here. This increase is partly due to acquisition, but it's really just making when we went from 4G to 5G, just making sure the towers are updated and capable of handling those speeds, type of thing. So if there's a next generation update, which I presume there probably will be in the next decade, maybe that instead of 1,000 megabytes per second, will be like 10,000, since everything grows exponentially, which would sounds absolutely mind-boggling. Since you put in 1,000 megabytes per second, it's like you can use 20 devices, gaming, whatever. But anyways, a lot of their money is used to acquisitions. They've bought back a little bit of shares in this period, issued a bit over here to fund some acquisitions. Um, Recently, I mean, really just increasing. It's really just that debt or debt dividend. Sorry. So their dividend paying out currently $3 billion, which, I mean, that's 100% of their 5-year average free cash flow. You're looking at every single dollar that they bring in, they're sending out in the dividend. And so if there's anything else that they want to do, acquisitions, reinvest, issue not issue shares, buyback shares, then they have to go into debt to do so. And so we've seen that they've done that before for this 6 year span from 2015 to 2021. They've issued debt because they didn't make enough money beyond what they want to do to issue for their dividend. And so, I mean, 3% is a very healthy dividend, well above the average of the market. And so, I mean, it's over double what the market is currently paying. And so, I mean, I don't see them taking away this dividend, but I don't want them to increase it. I want them to keep increasing cash flow and just keep it the same. Maybe at the end of 7 years, it's down to 70% payout ratio, 60% payout ratio. And I think that's more healthy even for a company that has nothing to invest in. It gives them the opportunity to be buying back shares or making efficient acquisitions. So here, I mean, if we just look at what their growth rate was, this is crazy. 144 over 4.1, power of 1 over 10. I mean, you're looking at 10% growth. Yeah, I mean, again, in the future, I could see it being something close to that. So maybe we do 8%. I mean, they have moats. They got a moat to moat. I mean, I don't. I don't know. This is the art of investing. This is where it's like, I don't think the growth at the end of the 7 years will be better than some of the other companies I've seen that I'm projecting 15% a year for the next 7 years. I think at the end of this period, it's still probably, though, going to be a 7 to 8% growth rate, 6 to 7, 8% growth rate. And I think the fact that they have that biopoly, whatever, um, I think that's really going for them. And they're pretty consistent. And I don't know. I think I see 22 as being honestly pretty reasonable. And for margins, let's do a solid range here. It has been going down, which is weird. Let's do 25, 30. And then shares have been going up probably with stock-based compensation. So 196, 96, really just 1%, let's say. So yeah, I mean, we're saying it needs to fall 43% to get to the price we're looking for. Probably not terrible. I mean, this is a company I would love to own, and I mean, it would be very hard for me to sell this type of company. I mean, it's just like if I was able to buy Costco some reason 10 years ago, 8 years ago, because I was a genius, and then it got to 50p. I mean, I'm a little bit skeptical I would have held until then, just knowing myself, because I know I've listened to Mohnish Pabrai. You can't sell when it's at value, overvalued. It has to be egregiously overvalued, and I just have tough time dealing with owning something with a 50p when I could own something with almost the same growth rate capabilities. Probably not as big of a moat, but same growth rate capabilities at like a 10p, 8p. I just it's just tough to do that. But I mean, this would be a company that if I buy, it would have to be probably egregiously overvalued for me to sell it. And my egregiously is probably like a 44. Like double what I think it's worth to me is probably egregious. But I mean, yeah, 43% drop. Amazing company. Definitely want to own it. But again, I don't buy things just because they're a great company. I buy it based on value. So hopefully you enjoy the video. Have a great rest of your day. Thank you.